Alright, so as we hit the noon hour, we're going to link up with Tech Trader in just a second, but we've got Chart Trader shorting some NQs, a half-size position at 74.50. He's going to risk 15 points on this one. And that gives me a great segue in order to bring in Tech Trader. Good morning, Sean. How are you?
Good morning, briefing.com.
Yeah, well, I guess I'm the unofficial voice of briefing.com at the moment, but we are welcoming you as Chart Trader. One of our futures traders here just shorted the NASDAQ.
Nice move.
Yeah, so you know, this one's already down 80-some points, the futures are, and we'd love to get your take on where we are. Here's, I guess, day two of a pretty good size sell-off that we've seen as far as range-bound. Anyway, I'm looking at the triple Qs, and I've got two pretty big red candlesticks developing so far today. What's your take on the overall landscape of the NASDAQ and tech stocks as a whole?
Well, I mean, I think that so here is the exact question I've been pondering, I guess, all morning. So, you know, we've seen these little, what I call almost like burst sell-offs. So we get like a burst lower. Kind of looks like we're gonna kind of have a real or a full-fledged correction. So something that puts some fear into longs, but then we kind of don't fulfill. So and then this has kind of been how we've had lots of little sell-offs on extreme sentiment readings, but they don't seem to really do what they usually do. So meaning they don't give you the kind of downside move that, well, for lack of a better word, they don't give you the kind of downside move you need to kind of get paid nicely on your shorts, because you know you're not shorting exactly at every single top. So you might have a short that's close to the top, but you might need more than a 3% correction to get paid off, right? So that's kind of what we've been seeing. So the question is this one finally going to result in a correction that goes deeper than just sort of what feels like a bad 2-3 day sell-off, but really in the whole scheme of things doesn't amount to anything? I mean, if you look at, you know, Apple, Amazon, Netflix. I mean, Netflix did go down pretty deeply. I mean, they definitely put in a correction, you know, but then they have this violent bounce. I mean, that chart actually looked pretty weak technically still. I mean, the bounce, it didn't even do a 50% retracement from the recent low to the recent high. Anyway, we could talk about whatever names you want to, but that's really it. You know, does this finally result? Well, you know, I've been calling for, and I hit like either 2 for 2 or 3 for 3, and sort of my last NASDAQ downside call hasn't really fulfilled. Even though it's happened, it just never fulfilled to the magnitude. So, you know, we've had plenty of like 150 to 250 point NASDAQ declines, but we haven't had a 700, 800, 1,000 point NASDAQ decline. So that's, you know, honestly, I don't know. I mean, I've been surprised at the persistency of the strength of the market through August. That, in fact, if there was a biggest surprise this year, aside from just how stupidly Twitter sells off every time it sells off, but probably the biggest surprise is the persistence of the same sort of bubbly, overvalued names that have kind of run or dictated the market upside for really since the bottom of 2016, since 2016 lows. So, you know, the biggest surprise is, you know, Amazon's just been able to persist to this point. Apple probably is the one that deserved it, frankly. I still wonder how that stock got to 92 to 95 just you know, 18 months ago or whenever that was. But anyway, you know, the persistence of FANG, you know, again, Netflix doubling this year at one point, Amazon being the second $1 trillion market cap company. And, you know, I think there's plenty of us that just knows that this is going to end, and it's going to end badly. The question is, you know, how far in the future it is. And then when do we finally see the rotation occur? And we've seen rotation occur but it's sort of been a name at a time. So instead of being at a group at a time, it's sort of a name at a time. So it's a very strange market. I mean, I've been talking about this several people I work with, and this may be one of the oddest markets that pretty much any of us have ever seen.
And it continues to get stranger, really. So based on what we've seen historically, recent history, let's call it, and the fact that we tend to look at a couple of days sell-off that ends up being a couple of 100 points, let's say, are you in the mindset that maybe this is a recurring pattern and you're going to start looking for some values on some of the stocks that you actually like?
Well, and I mean, that's what I've been doing. I mean, Twitter's basically back in my go zone right now. The only reason in fact, I haven't posted a buy of Twitter today is that this is kind of where I bought. I kind of restocked a lot of my positions. So I think I printed that I sold roughly a third of my stake, and then on that post earnings sell off, I think I bought some probably as high as 35 or 36. But around here, sort of 31 to 33. Is and really closer to 31 than 33 is really where I bought the bulk, kind of repurchased what I'd sold previously. So it's like, well, I could buy more, but I'm kind of rebuying at the same price, and I've kind of got the amount of it that I want right now. So, but that doesn't mean, I mean, I can put on a pretty good slug for a tactical trade. Here's my gut. My gut is this could be about it, and it could be at a good price, or they could, again, sometimes things get extreme. In fact, a lot of moves, whether they're upside or downside moves on almost everything, it almost seems like they have to get extreme before they change. And so extreme would probably be anything with the 29 handle or below. So, and hey, I'd rather buy it at 29.80 than 31.15. So, we'll see what happens. I mean, I literally am not worried about Twitter at all. I think I'll eventually get to a bigger position than I had planned, which will eventually probably make me a lot more money than I had planned on that name. Everything I see, I actually continue to like. So, as I look at, I mean, I wrote that they were going to start taking market share from Facebook quite a while ago. So I think what's going to happen now is I think people are going to realize that I was correct, or people will come along with that view that, oh, geez, look, Twitter's taking market share from Facebook. So I don't really think I've seen an analyst put that in print yet. But, I think the first one or two analysts that see that and basically put that data to print, whenever that happens, you get a big move. And, I mean, what is Twitter sold off on? Again, basically an MAU number that some people said wasn't that good. You could almost look at it and say, well, wait a sec, if they're deleting tens of million accounts and their MAUs didn't go down, might that actually be a very positive thing? Because their MAUs still increased last quarter, year over year, and yet they deleted tens of millions of accounts. That actually points to MAU and DAU strength. So again, Twitter always kind of sells off for dumb reasons, and in fact, I actually think that, I mean, it was acting good until the Senate testimony and the Facebook downgrade. It's like the Facebook downgrade combined with the Senate testimony algo raid, took 3 points out of it. So it is what it is. But yeah, I might add to it, but it just kind of feels like they're going to kind of do something crazy. And I think crazy would be like another 2 points to 10% lower. So 2 to 3 points, something kind of almost like shocking given that where Twitter was. I mean, nobody thought it shouldn't have been at 47 when it was at 47. There were plenty of analysts that were saying, oh, hey, I like it again at 44 to 47. And so at some point, those guys kind of have to step up and kind of defend their call at a higher price. And so I think we're getting close to that. But again, we might just need sort of a more extreme move. But like I say, I pretty much know at this point they're taking share from Facebook. I also basically know that they're one of the most important AI stocks on the planet. And they've never even gotten any credit for that. So I think when those two things come to light, Twitter could actually go up a lot more from here. All right. So aside from that, I mean, I think that still, though, if we finally have that large NASDAQ drop that I called for a couple months ago that never really occurred or fulfilled, is Twitter going to be higher if the NASDAQ's 600 points lower from here? It could be, but I doubt it. I'd say the odds of it being higher with the NASDAQ 500 plus points lower is like 10, 15%. The odds of it being at this price or lower is probably 85%. So I'm kind of willing to take my odds that kind of maybe everything sells off a little bit, except for something like a Cloudera, which I don't know if you want to talk to about. That's a name I put back. In fact, I put on my focus list, I think right around $13.50 to $14. Took a quarter or so, but they finally produced a quarter that was kind of almost easy to call, and I think again they could have a string of these good quarters, and the stock's up 22%. I mean, really, it could be up a lot more. I mean, this stock is still a very cheap stock at 20 to 22 relative to pretty much everything else in the cloud software space. So again, floor's open to you, but I mean, so stocks do have these big moves higher, when they have a positive catalyst. So my point is, Twitter basically is just kind of waiting for the next positive catalyst to occur. And I don't know what it will be. It could be good earnings. It could be, an analyst just saying, hey, don't worry about the MAUs because the stock isn't really relevant to that. Who knows? I mean, it could be any number of things.
Yeah, actually, Cloudera was the one I wanted to talk about next, and I didn't suspect that you would have any plans on selling this one, but what is your overall price target on it? Because you've been somewhat bearish on the cloud space as a whole, with a lot of the other names, but this one isn't in that category. So just kind of walk us through your overall thoughts of the cloud space and this one in particular.
I think on the focus list, my last number was 29. By the way, I would say 29 is sort of like my Twitter target. I had a $44 to $49 Twitter target, when the stock was 14. And I would even said it was conservative there. And so I've raised it a little bit since then, but I would still say it's conservative because I think the stock could go up quite a bit more long term. So Cloudera, I think it's on my focus list as 29, and I would say this is basically a conservative target. I mean, and that would basically be roughly a double, kind of, or a little more than a double from the lows. So I don't really have a reason to raise it until it gets there or close. But it would still be a very cheap stock. I mean, it would basically trade at 28. I think it would trade at least a 50% discount, something like an Adobe. So, and they're producing now. That's growth adjusted too. So, that's giving them credit for their higher growth relative to Adobe's. But this could be a big, powerful company long term. I mean, we've seen what's happened. One stock, I did make a mistake on it. Honestly, I just never liked the stock that much. I really liked the value and the price at the time was Twilio. But never in my wildest dreams would I thought Twilio would go from 25 to 80 bucks. I mean, I kind of thought it kind of deserved to go to like 45, 50-ish. And, Twilio went to 80. And so, I mean, that's when I really liked. I really liked the value, but I don't know if I love the company. I guess I should have liked the company more. But the bottom line is I still did very well, but I mean, geez, I missed a bunch of upside on it. Cloudera, I don't think I'll miss upside. Same with Hortonworks. I don't think I'll miss upside. I think these are names I'll ride because I have a deeper, stronger kind of view and thesis on these. I mean, if you just kind of like look at the amount of credit that Amazon Web Services gets relative to how much AWS has added to Amazon's market cap. Well, what are some of the key tools to AWS? I mean, it's literally Hortonworks and Cloudera. So it's the software underneath them, Hadoop, and whatever Cloudera's paradigm is. So the bottom line is, these are super important tools to anybody doing big data analytics, and yet Amazon Web Services, which is a small piece of Amazon, has gotten far more credit than the actual companies providing the tools that are making a lot of this stuff happen. So again, over time, I think these things get rectified. But yeah, no, Cloudera. I mean, it's up 23%. I mean, here's what'll probably happen. What did Twitter do when they finally had that big report that broke the bearish sentiment? It basically doubled. So went from 14 to 28, and then it's obviously moved a lot more. what did Nutanix do off of that stupid 15 low? Same thing. When you finally got a good quarter, they had more than one good quarter. It was an easy double. Twilio did the same thing. So I don't think there's much reason to think that, I think Cloudera, I think people will realize in time just how crazy that $14 price point and lower on Cloudera was. Just like Hortonworks was $7 not that long ago. I mean, that was just an unreal value. That was probably a few months before I joined Briefing, but I think Hortonworks was still around 10, 11 when I published my first focus list for you guys. And it went up 2.5x from that, and it's still a cheap stock. So this is a very interesting company, so we'll see what happens. I mean, I think that, the other thing, if there's anything I like best about Cloudera and Hortonworks, and again, my call was, hey, I'm long these stocks and short higher valued cloud names. So, but I think the most interesting thing is I think the growth of these things could be very durable. Kind of like, I mean, they're basically kind of Red Hat for big data analytics. So if you just know the history of Red Hat didn't just have good solid growth for like 2-3 years and then peter out. It had good solid growth for the better part of a decade. So I kind of think that Cloudera and Hortonworks could follow a very similar path of what Red Hat did before. And in fact, I think the importance of what they provide is actually a lot better and a lot more important than Red Hat.
All right, so let me look at the HDP chart. So Hortonworks, that's ticker HDP for all those listening who want to follow along. I can't remember, what did you say your price objective was for Hortonworks?
Well, the current one is, what do I have it at? 30, give or take 50 cents. But yeah, basically 30. And again, I would view that as almost highly conservative. But, I mean, this was a stock that was 7, and I think I probably had like a $21 to a $24 target when it was 7. And then they just kept growing. And again, I think the durability of the growth for these companies is better than people think. Yeah, I mean, the other thing about Hortonworks is it's kind of funny. If you look at out year, now this is, I don't know if Cloudera is the same thing. Hortonworks, though, this is definitely the case. Out year numbers, their revenue growth projections are pretty modest, and I'm talking by the analysts. And then when Hortonworks comes through with their numbers, they're quite a bit higher. So back, I mean, there was a time when analysts were projecting 34% growth. Hortonworks came in at 48. And so now if you look at out year, analysts are projecting roughly 21, 22%. I wouldn't be surprised if Hortonworks actually comes in closer to like 25 to 27, maybe even higher. So I mean, this is kind of one of these things where now the revenue base is bigger, the margins are getting better, and so it could just be one of these things that over time people just get more comfortable with the name. But same thing, it trades at a huge discount. I mean, this is a huge valuation discount relative to its growth of most of the other cloud stocks that I've kind of recommended shorting. So we'll see. I mean, Hortonworks, I want to say yesterday, I think intraday Hortonworks was down 10-11%. Maybe even 12% at the most. It's like, okay, why are they selling Hortonworks off? With a NASDAQ drop, right? But so there's a perfect example. It's like, well, they just kind of take everything down, whether the name should be deserved to go down or not. So I mean, Hortonworks isn't even up as much today as they were down. I think they were down basically roughly 2 points. I don't know if they closed down 2 yesterday, but at one point yesterday they were down 2. They're only up 70 cents today. And, again, they had a great report, too. I mean, I think if they bounced, I think they had a nice gap of like from 17 to 21 on their own report, and haven't really put in an extension move. I wouldn't be surprised, by the way, if Hortonworks puts in a pretty nice extension move now. I think Cloudera, they may try to fade this a little bit, but I wouldn't be surprised if that challenges that 21 to 23 area, let's say over the next quarter. Same thing, Hortonworks, I mean, the setup on this is really good. I mean, because this is more of like, I don't think they're that way away from all-time highs now. All-time highs, I think, around 28. So that's kind of what I've been looking for in Hortonworks. I kind of think that they could make a run to all-time highs, and then do they put in that crazy move that we've seen some of these stocks put in? once they break all-time highs. I don't know, but I mean, that's if they follow the pattern of other software names, that's kind of what they should do. Like, because there will be people that literally have ignored them the whole time until they break all-time highs, and then all of a sudden they'll say, "Look at Hortonworks; it's the greatest thing in the world."
All right. Let's see. Wanted to touch on some of the names such as AAOI. That one was weaker. It's weak again today. I hadn't looked at some of these fiber names today, but I know that a lot of the listeners out there would love to get your take, especially if you're interested in picking up any more. A lot of them I know that you're already involved in and maybe fully loaded on a lot of these.
I was just gonna say fully loaded and staying there.
Now,
yeah, I mean, it's. Go ahead.
Let's put it into this context, because we always got listeners, new subscribers and whatnot, who are new to the show, new to what you have to say. So not only put it in the context of where you are, but also if you were not involved in it, if you were brand new to the story or brand new to this and like, oh, hey, this is a good value. So keep that in mind when also answering that question, if you will.
Oh, yeah, no. So, I mean, I'm always early. So, and sometimes being early pays off. Sometimes being early means that, sometimes I eat 20% before I start making a lot of money. But no, I mean, here's the easiest way I can say this, and I've published this several times. I actually think the fiber optic space has made a hard turn. So the hard turn is a fundamental hard turn, and I think this hard turn could be very dynamic and very powerful. And it's again, if people that are familiar with my work on cyclical names like Micron and Western Digital and things, it's I think that they could move in a very similar manner to those names where they're really an easy call. If you know cycles, they're an easy call, but people get overly pessimistic as the cycle hits the trough. And then what happens is there's always kind of the first hope turn, which was probably like 2 quarters ago. But see, that wasn't really a turn. It was just the hope of things getting better. And usually that's where stocks bottom. And that's exactly what happened. And then they kind of wrestle around. But the hard turn is when fundamentals actually turn, and this is the first quarter. So if somebody missed, I mean, a lot of these have gone up a big percentage off of lows, but stocks don't. They're not done going up when they just have their first good quarter. In fact, they usually go up after they've already had their last great quarter, and then they go up more than they should because people are overly enthusiastic very late in the cycle. And so, again, AOI was a $90 stock that people being analysts were extremely bullish on. And, I was like, this thing's peak earnings. I mean, all day long. And sure enough, that was a huge call. But it wasn't really a hard call. Likewise, liking these names for the last 3 to 6 months has actually been a really easy call. Because there really hasn't been very much downside, so you just had to wait for them to produce a hard fundamental turn. I believe that's fully happened this quarter. Finisar reports tonight. They're the last of the companies in the space really left to report. Literally, I think every single company in the space has beat. I'm trying to think if there's one that hasn't. I can't recall of one. So even the one that was probably the hardest call was Acacia, because there's more moving parts. There's some that ZTE exposure there, and nobody really ever knows how that's going to come through. But even Acacia had a big guide. Guide was way above expectations. So the bottom line, I think this group has just put in Q1 of a cycle turn. And so if you follow, for example, I'm not saying these stocks have as much upside as Micron did, but if you follow Micron, Micron went from 10 to 14. Everybody still hated it. Went to 18. So in the first good quarter, went to about 18. Probably pulled back to like 14 to 15 at least a couple more times. And then, I don't even know how many good quarters they strung off. At least like 5. And I do think a similar setup exists for the fiber optic space. Again, I don't know if these names have 5-bagger upside. In fact, Micron did 6-bagger, but I would say 2 to 3-bagger is possible. In fact, it might be more than that. But, again, I'm always kind of conservative with my views. So we'll just see. But I really do believe we've seen a hard turn. I think the group's going to inflect higher. And there's actually a lot of reasons to think that this could be a slightly better cycle than the normal fiber optic cycle, and it's because 5G is coming. So, in fact, the last 3 times that this group has traded the best, like one of the best moves for this group was sort of from, even if you take the '09 lows out. So let's give each of these names a double or a triple off of crazy extreme '09 lows, and you kind of benchmark them from, let's say, either early 10 or late '09. And again, they'd already gone up a lot. But from that period, these names all went up a ton. And that was because I think at the time, that was the 3G investment cycle. So they had a really, really good move for another like 4 to 6 quarters. Then the group peaked in the spring of 2011. So then they all reset. Everybody hated them again all the way through, late 2012, early 2013. And then the group was a really, really good performing group. Guess what? Into early spring 2014, that was the 4G cycle. So we haven't had a meaningful, wireless upgrade cycle since 4G, and 5G should be a lot bigger. So this is always the 5G cycle will probably aid or add a lot of capex spending to the fiber optic names.
If you had to pick one right now, which one would it be?
I wouldn't pick one. I'd pick 3. I pretty much, and I think
3.
I've stuck to this. I usually say Acacia, Finisar, and then MTSI. Those are pretty much kind of been my top 3. At one point, Light was, but Light's been the name that has kind of been the star of the group. And this is a name I like, the 18 to 22, and it's almost 70. So. But Light still should be a leader. I mean, they're doing things in the space that are very innovative. They have a kind of a duopoly with Finisar and some 3D sensing stuff, which could be a big deal. So the bottom line is that's still a name I like. I'm out of it now. I think my last ads were like around 51. So that's a name I still like. I could still be long it, but I prefer other names. So those 3, Acacia, Finisar, MTSI. I'm long more than that. I'm long probably 6 names in the space, but those are the 3 I think have the most value and the most upside.
All right, and I did that for any new listener's sake who might be getting into this space at this point now. So there you have it. We did have a listener question on INFN.
Oh, by the way, before you do that, I posted a note on AOI. You asked about AOI.
Uh-huh.
AOI is probably like the cult favorite of the space. I was long. So I flipped from short to long. Probably around 30. The stock went to like 24, maybe even below 24. But I exited this. This has had a big drop. I mean. Of the names that could make a big turn from a recent drop, it's probably one of the better trading names. I don't love this name long term because of a technology. So how do I view the technology competition in the space? Meaning, who's going to remain or be able to keep technology leadership long term? But I think the bottom line is, this has been a big violent drop. There was like kind of some Intel rumor. But this is the high beta name of the space. So if put it this way, if the Nasdaq has a big turn and goes north, this name will pop. If Finisar reports a good number, this name might pop. I don't know. I think I published just yesterday that I kind of like it close, like 32 to 30 and lower is where I really start getting bullish on this again. But I kind of milked this long pretty good, got out of it, have avoided pretty much this whole decline. I think around 35, 36, I was like, okay, I'm watching it again, but I'm not buying it, and so that's been proved right so far. It's down like 4, but it's kind of enticing, but I'm just not sure it's done. It's kind of like Twitter. It's like, well, put it this way, I think I could buy it here. I'm pretty sure I'd make money, but I'd rather buy it at 29 or 28 than 32. I think that's the best way to say it. But if the group turns or stocks, if tech turns, I might just throw a trade at this because this one tends to go up more than anything on the turn. So I'm just throwing it out there for the quick traders. For all the quick traders, this should be the name that you have on your screen for the group too.
Okay, and that's good to single that out because there are those that have a shorter time horizon that is typically not the type of trades that you typically post, even though you will offer those out from time to time. So, all right, let's get back to INFN. So, let me pull this chart up, INFN, and this comes after listener S. After the company filed they filed 4 bond offerings and a stock shelf offering. Are you interested in adding here, or do you wait till the deal to put more pressure on it?
Well, this is just a tough trader. So I've liked this. At this price, this might be. So I think I published around back when they were closer to their prior lows, which I said were lunatic lows. That was the gap from like 9 to 650. I mean, it's getting fairly close to that price, and at this price, so at kind of 8 or anything below 8, it might be fundamentally the cheapest stock in the group, especially relative to where the other stuff is trading now. I mean, at one point Neon Photonics was, but that stock's doubled. But it's just a tough name. It's got limited institutional support. It's easy to raid, and I think just a ton of the selling. And by the way, they had good news. I mean, these guys have had plenty of good news. They basically doubled off that 650 area or close, and there hasn't really been bad news. I mean, unless you want to say, okay, they're buying Corient. Yes, are they going to issue? Do they have to fund that purchase of Corient? They do, but they're buying Corient at a great price. So again, this is one of the consolidators in the space. By the way, that's a bullish thesis for the space. The space has had a lot of consolidation. One thing that plagued this group for 15 years was there were just too many companies in the space. There were some private companies. There's a bunch of public companies. There was a bunch of zombie companies kind of left over because they had a bunch of cash from 2000. They did secondaries from 99 to 2000, so they had literally, some of these companies basically traded for cash for a decade, even though they didn't have very much of a business. And so almost all those the zombies pretty much have all been eliminated. Infinera has been a good, smart acquirer, but they've never really got much benefit for it. I like them. I'm not adding to it. I have to wait and see how I feel. I mean, sometimes I change my mind in 10 hours. Sometimes it takes a couple weeks. It's at a price I would buy it, but right now I'm kind of sticking with my top 3 for the most part. I still, I have Viavi. Viavi is another name I really like. But that just doesn't trade well. I have a stake. I'm up on it. I'm up decently on it. But, they had a whopper of a quarter. Didn't really go up that much. So, some of these names trade better than others. Infinera is a tough trader. It is very cheap. I think the stock is worth way more. But I think I actually think I took this off my focus list. In fact, I know I did. I think I swapped MTSI for this because this is a tough trader. And, I prefer stocks that not only that I can make a good long-term return on, but I can make multiple short-term trades on them, like literally tens or if not hundreds a year. And this is just a tough short-term trader. But there's a lot of value here. I think it's a good name. I think ultimately Infinera will get bought out. I don't know who the buyer of them will be. Juniper should have probably made 2 or 3 deals in this space, 5 or 6 or 8 years ago. They never did. Cisco would have a hard time buying because they have a lot of incumbent leadership in the group. But there's plenty of people who could make entry into fiber optics, meaning plenty of large technology companies that either are in the space in a minor way or could get into the space. Interesting history, IBM used to be a huge player in the fiber optics space. And they actually got out of it at a great time. They sold their assets. I can't remember to which companies. It could have been Corning, could have been JDSU, could have been Nortel. I can't remember who bought all the IBM fiber optic assets. But at one time, IBM was a very strong player in the space with a lot of IP. So so sometimes the old guard comes back in. Intel is in this space and probably in a bigger way than they've ever been. They try to kind of be a competitor in the space, but for Intel to be a player in the space, I think they'd have to buy somebody. But ultimately, I think Infinera will probably get bought out, and it won't get bought out off of a low. They'll have a few quarters where they finally get their due, they go up, and then they'll probably get bought out. That would be my guess. I have zero idea when that would happen, though.
Do you currently have a position in INFN?
I do. I have INFN at small. I have Viavi at small. And again, I like the name, but it's just a tough trader. And so I think we all do that. We all love names that we tend to time better, trade better, have personal success in. I don't know. I've had good success in this name. I can't get as many easy trades. I mean, I've traded Acacia a ton of times. And I always seem to have pretty good cadence with it. So so I've made a lot of short-term money trading Acacia. I can't think of that many times I've made good short-term money on Infinera. Usually it's like a grind. I think I've got a good short-term trade. Then weeks later it's about the same price. Then I get a spike, but it's not very good. Then I eventually get my exit. but it takes a long time, and it's a grind, and it's tough. And and it's money I could have maybe recycled 5 or 10 or 15 times in something else. So that's just my personal view. Other people may have better cadence and better individual success with it. And what I always tell people, hey, if there's something you're doing you do well, keep doing it, right? So if you happen to be a good trader of Infinera, which means you're one of the most exceptional people on the planet in my view, I guess keep doing it. I have not personally had the best success trading this name. I've had good investment success on it, but it just seems to take too long for trades that should work out at certain price points to work. I think that's probably the best way to say it for me. So again, I have my own technical system. It could be a name that just doesn't mesh with my technical system. So the parameters that I like to use that I find that works for hundreds of companies and for the markets, maybe just doesn't work for Infinera. So and I'm not going to spend a ton of time to calibrate my system to tweak it for one name. You know what I mean? It's just not it's not worth the time or effort, especially when there's so many other names. I mean, now this isn't a fiber optics name, but I just have good success trading Ambarella, AMBA. So it's a good example. I don't know, for whatever reason, I kind of get it. I kind of get AMBA. Same thing with AOI. I mean, AMBA was a stock pre my briefing days. In fact, I got in a big Twitter debate on AMBA when it was near highs with guys who love the name. And I said, this thing is like the easiest short in the world. And it was like 118 to 120 something. And literally, I think I called it within like 3 to 5 points of the high and nailed the short on that name. And same thing. Then I flipped and been long once it got cheap. And I've had a lot of pretty good short-term trades as well as decent investment success on that name. And even just now, I mean, this name has acted very well from a tough quarter. That is the one thing I would end. I'll end my conclusion, or I'll end my commentary on Infinera in this. I kind of just do. It kind of bugs me sometimes when a stock has good news and they trade really, really poorly off of it. And I actually think Infinera's had quite a bit of good news. I've liked the last 2 earnings reports. I thought for sure they would go up on that Corient buy, but that's the Corient buy has been the thing that they've been algoed lower. So that's been the deal. It's like I don't know if they're attacking the dilution or if they're attacking the debt raise. I mean, I don't know, but for whatever reason, pretty much ever since they announced the Corient buy, the stock's traded bad.
So safe to say you have no plans on adding to this one.
No, because at current prices, in fact, I was just pinging a friend of mine. I mean, like MTSI in 22 is pretty attractive, and that, again, I'd almost say if I bought some, well, whenever I do buy my next round of MTSI, I bet I make money on it within days to weeks. where whenever I make my next buy of Infinera, I have absolutely no idea how long it's going to take me to exit that trade. So yeah, so I would buy MTSI. I mean, I'm very comfortable with my Finisar position. I might have to scrub the short-term trade, by the way. I actually thought I'd get an exit on it before the report. I might lose like 20 or 30 cents or 40 cents on a small Finisar trade, but I mean, if I didn't feel I didn't have enough Finisar, I would buy more into the print. But I loaded this name up previously. So, and I have a personal discipline. For one, I like to make sure I have my positions well ahead of time, i.e. at least a few days before a print. I just don't like to get in the habit of making trades hours before a print, and so I'm just never. It's been a very good discipline of mine, by the way. I think a lot of people tend to do stuff when they're thinking about it. So in other words, it's sort of like preparation equals much better alpha. Whereas if you're always the guy who's always like reacting to things, oh geez, Finisar is going to report in 48 minutes. Gee, what am I going to do? Right? Whereas if you're somebody who's planned out your position for days or weeks or months, my general guess is you're probably going to do far better. So my personal view and discipline is I don't like really putting investment stakes on hours before an earnings print. If I'm going to hold something through a print, I'm going to have the position laid out days or weeks or even months ahead of time. So, but I mean, honestly, I think I'd rather buy Finisar than Infinera right here at current prices, and Acacia too. So I mean, the most names in the space. I mean, even AOI. I mean, if I want to take a swing at a trade, I'd probably rather buy AOI at 32.50 than Infinera. Now, all that said, at 770, Infinera is very attractive, and it could work. I just, I got plenty of. I think the best way to say is I got plenty of targets I'm already shooting at in the space, so I don't feel the need to add another one.
All right. There was a question.
Do like this space though. I mean, I think, and I've written this. I've said. And this is important. So if there's new listeners that haven't read this group could end up being counter-cyclical with tech. So in other words, if there could be a time, and I think there should be, where tech trades poorly, underperforms maybe other sectors, maybe is subject to a big correction. Wouldn't it be funny if when the rest of tech is struggling, and tech is going to have a tougher time with comps next year. So comparables. So comparables are going to be a lot tougher next year than they were this year, and they were the year before. Comparables for the fiber optic space are going to be almost exceedingly easy. And I think the group is going to end up being counter-cyclical with the rest tech. I also think 5G and 5G companies are going to be counter-cyclical with the rest tech. So that's one reason I'm so bullish on Qualcomm. While I don't really like hardly any other semiconductor companies.
All right, and just in case those out there don't know, Finisar will report after the bell today.
Yep.
All right, so we're going to shift gears a little bit. We're going to focus still on some listener questions, but there is one, and I've seen this question before, so I apologize that we haven't addressed it in the past, but one of the listeners wants to see if you have any opinion on a company, BE Energy, and I believe the ticker is BE. Yeah, Bloom.
I don't think I know.
I'm sorry. It's Bloom Energy. BE is the ticker.
I don't think I know it.
Okay.
It's not. Is that a recent IPO or?
It's fairly recent.
Is that Bloom that's been like featured on 60 Minutes and they have Bloom boxes and all that kind of stuff?
That I don't know.
My guess it probably is. So all I know about the company is just what I just said. So it may be the same company which has like supposedly had paradigm-changing technology for the green energy.
Yeah, space. I believe it is then. Yeah. From what I recall,
on 60 Minutes and all sorts of things, and I believe they have like contracts with Google, and Google's a customer, and other big notable Silicon Valley companies are customers. I might have to look at it. Honestly, probably my biggest screw up this year has been solar. So I've been wrestling with a Sun Power position for most of this year. Thankfully, it's not a very large position. But I mean, I thought Sun Power was just dirt cheap, kind of 750 to 8-ish. Now I'm not down much dollar-wise. Percentage-wise, it's a buck. I mean, a buck off 7 is more than 10%. But there's been plenty of good solar news in my view, and solar is a space that typically. So if tech is hot, solar typically trades well, even if their news is bad. This is like the first. Excuse me. This is like the first time in history that we had a huge tech rally, and solar has traded like one of the worst groups in the space. And so I don't know. It's just weird. Now I'm not giving up on SunPower. I think it's got magnitudes of upside. At the same time, I've kind of got a chunk of it, and until it starts acting better, I'm not going to commit any more money to it. So in fact, at this point, I'd rather probably buy it on a break of like 780 to 820. I think I'd probably rather buy it there than try to bottom tick any more of it. I've already tried to bottom tick it, I think, like 2 times, 3 times. So I've got enough at low prices, or prices I thought were low at the time. So yeah, I mean, this is one I probably want to see act better. And, I've got plenty of names working too. I mean, Twitter to me is still a working name. I mean, I was involved in Twitter half the current price. So, there are just other names I'd probably rather buy. But I've been really, really wrong on solar energy, because I just thought if X, Y, and Z happen, meaning kind of the market keeps doing what it's doing, the high beta stocks keep going up, at some point solar's just got to have this massive catch-up trade. And part of it's just knowing history, the history of technology cycles, and it's always traded that way. So this could be the first time ever that solar just doesn't participate in technology rally. But again, this is one of the weirdest markets of all time that I know about. So it's at some point it's going to go, but I have no idea. I mean, they've had plenty of good news in the space, and it hasn't really seemed to translate to any notable upside performance for the group. So Bloom, I guess I'll look at them at some point. But I'm like, if I can't make money off SunPower at 750 to 8, then I don't know how much how much interest I have to add other alternative energy when I kind of have something I think should work, and I kind of own it at what I consider extremely favorable prices. I'll probably just wait for my solar bets to work. And if they don't, they don't. It's not going to kill me, but I do think they will. I don't know. I might take a look at Bloom, because I mean the company always fascinated me, but I just don't know honestly if I have like just the room for it, given kind of my positioning and other things. But we'll have to see. I mean, it might be a good one to look at, and but I can't say with any expertise that I really know about the company. So I have to kind of just see how things develop over time on it. So maybe other people on the site know it better than me.
Yeah, I'll ask around and see if there are any additional, maybe Commodity Trader. I can't remember if he's involved in this one or has been in, but it'll definitely be something on my list to ask him.
I mean, here's one thing I will say. I mean, here's the other reason I thought solar was going to go. I mean, I was very bullish on oil, and I said oil was one of the easiest buys in the world at like $35. And, I mean, I thought oil was going to go up a lot, and oil did. And it usually, even though they're not really tied together fundamentally, usually when oil goes up a lot, it does. Solar stocks do too. I don't think oil's done going up. I think you and I have talked about this. I actually think there could be a lot of reasons for oil to have almost a scary sort of upside move, meaning in a move that literally the oil goes up enough that it literally does scare, like the Fed, other global central bankers, the inflation hawks, and people like that. I mean, if something like that were to happen, it's good to have an eye on a number of alternative energy plays. So like a setup like that could really make Bloom go. So that was the last thing that really made alternative energy stocks really sing, was that huge when oil got crazy high. That from the move. I mean, it was already fairly, if not overpriced, in the 2005-2006 time frame, and we all know what oil did. I mean, oil went to like almost 150 when the rest of the world global markets were imploding, and that was the last sort of great alternative energy cycle. And alternative energy stocks went absolutely haywire to the upside, and they were even doing well as Bear Stearns was collapsing. Interestingly, was the Lehman Brothers collapse, which actually killed quite a few solar companies, because a lot of solar companies have financing with Lehman, and when Lehman went down, that was that actually I think bankrupt or contributed to the ending of a number of solar companies at the time. But anyway, that was a little history look back. But yeah, I mean, it's good idea to have an eye on a few of these, because if oil really rips, maybe that's the catalyst that finally gets these alternative energy stocks to kind of make up for lost time.
All right. Now, here's another question, but I think I want to give you some time to prepare for this one. So I'm going to read it, and you can give your thoughts if you are so inclined. However, this might be something that we want to revisit because I think it involves something that we talked about off the air a couple weeks ago, and that is helping investors and traders understand the different valuation metrics and some of your favorites and how they relate to different industries and whatnot. But I'm going to read this question to you, and you can run with it if you want to. It asked, "Could I ask Tech T to run through metrics of price of sales, etc., when a company is losing money, and how long of a runway he allows for a company to attain profitability?"
That's a tough question in a short period of time. I definitely have methods of how I deal with that. I think here's the fast answer. Some of this is sort of just industry know-how or tech experience and valuation experience and developing a methodology. But there's not one clean answer. But I mean, there is, there's such a thing as, I mean, I'll sum it up this way. There's such a thing as a post-IPO software playbook, if you will. So this is sort of the conventional playbook. Conventional playbook is, okay, company IPOs. It could be Twilio, could be Nutanix, could be any of these newer IPOs. Could be Zscaler for whatever. So usually they come out, everybody's pessimistic on them. They all call them crazily overpriced. I mean, CRM had this pattern. Because why? Well, they don't have a PE. They have negative earnings, but they have really good revenue growth. And so there's all this conjecture, oh geez, will they ever become profitable? Well, of course they will. Most of them will. Most of the ones that IPO become profitable. And so the funny thing is, I tend to like these companies when other people don't like them, and the revenue growth is really good, and people are worried about profitability. When the masses sort of like them, because all of a sudden there's a PE you can glom onto, usually to me, either that's the point in time they're expensive, or that's the point in time where there's just not as much juice left in the tank. So in other words, Facebook was my second largest position when it was a $22 stock and traded 5 times net cash. They might have been profitable at the time, but I honestly can't remember. My guess is they had negative EPS, but they might have been marginally profitable. But okay, so now people say Facebook is cheap. Well, I can guarantee you, when I was buying the stock at 22 with a $55 billion market cap before they had mobile revenues, it was a far cheaper name than it is today. Yet most of the people who would say Facebook is cheap today probably would have written and published something that looked like and said on TV that Facebook is exceedingly expensive back then, when it was a $22 company and a $55 billion market cap, and they had $11 billion in net cash. So, hey, I'm a contrarian with a lot of this stuff. I guess develop your own methodology, but there is a typical kind of software playbook, and the software playbook is these companies usually successfully grow into themselves. Workday has been a good example. ServiceNow has been a great example. CRM's been a great example. Hey, I remember when Red Hat didn't have profits, and people were wondering, hey, geez, when's Red Hat going to have profits? And there was a much better stock to buy back then, by the way, because it was probably a multi-bagger lower. So you kind of got to pick your time, pick your spots. I mean, honestly, this has been kind of a really great and really bad year at the same time for me. I had Mule. Mule was super successful. I mean, I was on all these names when they were cheap. Coop, I owned it once at one time. I mean, Coop's gone haywire to the upside. Again, I guess I should have liked Twilio more than I did. I didn't fundamentally love Twilio. Is probably the mistake I made on that. I mean, Coop just hit 84 the other day. I guarantee, I know I was buying Coop near its post-IPO lows. But you never quite know how haywire these things can go. But like I say, I mean, Coop's a very good company. Mule is a very good company. They're gonna attain profitability. I remember when New Relic, which I'm short, I remember when New Relic had negative EPS. And again, it was a much cheaper company then, even on my fundamentals. And now most people would say, oh, it's an easier buy or it's a more comfortable buy because they have positive EPS now. Well, I don't know. Personally, I like the stock. I thought it was a much better buy at 35 than 98. So anyway, we all have methodologies. We all have things we do. I can't really give an answer to that. I mean, that could almost be a seminar. You know, so I mean, maybe that's kind of part of the kind of the art of my deal. But you know, I definitely have methodologies but here's the best way to say it. I don't know if I overly worry. If I like the company, I have to have a view that they are going to be profitable. I'm more worried about cash flow personally too. That's the other thing. I think people are far too. I think they put far too much emphasis on the stated EPS number when the ultimate number is cash flow. For example, I mean, like people were really negative on Twitter when the stock was at lows, and I talked about big gap EPS losses. Well, at the time, Twitter was very nicely and had a strong positive cash flow, had great cash flow growth of probably like 75, 85, 100% or more, and had positive cash flow, and at the same time had negative gap EPS. So, you know, you just have to kind of learn this stuff on your own. It takes a lot of experience. You kind of have to look at the stuff name by name. Honestly, there's really never going to be an easy answer on something like that, because a lot depends on the cycles too. I mean, right now people are just willing to pay way higher price to sales ratio. So we're in a cycle now where people are paying very high premiums and price to sales ratios for growth. In 2015 and 2016, I mean, most of the companies we're talking about, well, the ones that existed anyway. I mean, you know, these things were exceedingly great values on price to sales metrics, yet nobody cared. So, I mean, just pull up a chart of Newer, pull up a chart of Varonis, that's VRNS. Varonis I liked at $18. You know, pull up a chart of Hortonworks, I liked Hortonworks at $7. So, you know, you have to kind of the cycle is probably as important as anything. Because if you're in a cycle where nobody wants to pay price to sales premium for growth, it doesn't really matter how good the company's fundamentals are. If you believe in those companies, you're going to have to ride through a tough cycle to get paid. Whereas if you're in a cycle where people are paying exorbitantly high prices for the growth, like they are right now, you can kind of get away with a lot of mistakes. In other words, you can do a lot of stuff wrong and still find stocks end up going up a lot because the cycle's favorable. People are paying up for that. So, you know, the trick is right now, how much longer are people going to pay these very exceptional high price to sales ratios for growth stock? I mean, I don't know. I mean, I'm a guy who I like growth. I've made most of my money trading and buying growth stocks. I'm usually pretty liberal with what I'm willing to pay for a growth stock, and there's tons of stocks that lots of people are lapping up right now that I'm either short or want to be short or have no interest in because I think they're trading just exorbitantly high, trading at exorbitantly high price sales ratios, and other people think they're cheap. So, you know, time will tell.
All right. Hopefully that covers that question.
I mean, it's a long-winded answer, which I could have just said, well, there's no way to answer that question in like 3 minutes or 5 minutes or less. I don't know. I think I answered it pretty well because it's incredibly complex. It'd be like saying, how do I beat, you know, who's the chess master of today? It'd be like saying, well, what strategies would you employ to beat the chess master of today? You know, there's almost an infinite number of answers, right? So yeah, that's a tough question, but I mean, it can be worked out. You know, but that's I mean, again, you could almost give a clinic on, you know, tech stock valuations, cycles in tech stocks, you know, cycles and price to sales ratios, expansions and contractions, and you know, all that kind of stuff. So yeah, there's no easy, short, clean answer to that question, unfortunately. Or well, actually, it is fortunate because the more complex things are, usually the better traders and the better investors end up making a lot more money. When things are exceedingly easy, it doesn't really favor those that work hard. When things get tough, the higher the skill set people have, the better they do, usually.
Well, the trick is to find something hard and make it look easy, right?
Yeah, yeah. Well, and again, you know, sometimes too, if something is too hard or too complicated, or, you know, work within the parameters that work for you. I mean, not everybody is going to be able to devote, 60, 70, 80 hours a week to stock market know-how, participation, trading expertise, and valuation, right? I mean, so probably a lot of readers of Briefing have full-time jobs that have nothing to do with the space, although probably a ton of investment professionals are subscribers to Briefing. But yeah, I mean, we're trying to help everybody, right? Whether given from people that don't have a lot of valuation expertise to people who are industry experts. By the way, they're industry experts who probably disagree with most of everything I say because they're on the opposite side of the trade, right? So yeah, there's different. I mean, my answer might be completely different than somebody else's answer, too. Somebody else might just say, oh, hey, find the stocks that have the highest relative or the highest growth for a successive number of quarters, and basically pay anything for them because those are going to be your winners until they aren't, right? But those guys tend not to do very well, and that tell you, okay, so why has the stock gone down 86%? Or well, why? How come AAY started missing numbers instead of beating numbers? So. Anyway, there's a lot of ways to skin the cat in this game.
All right, this is the last one. NASDAQ trading at its lows. How low are we going?
I mean, I don't want to. I mean, I'm not like super bearish, but it seems like every time I come on, we're usually talking about a potentially nasty sort of outcome.
And then the next day it goes up.
Yeah, I mean, I don't know. I mean, here's what I'm going to say. At some point, I just think certain things occur, right? So stocks trade below 150 EMAs. Stocks trade below, or indices trade below 200 MAs. Indices trade below the cloud. I mean, the last time the NASDAQ traded below the cloud and traded to the 150 EMA was in March and April. So at the time, NASDAQ went from 7637 to 6805. So how much? That was an 800-point decline, which, by the way, I called that decline. I don't know. I mean, aren't we sort of overdue to kind of at least go down and maybe trade around the 150 EMA at some point again? So I'm just sort of like, I'm sort of surprised this hasn't happened yet. I mean, we've kind of gotten through a lot of like minor sell-offs and came through and just came out roses on the other side. I still think at some point we just, for really to go a lot higher, we need to just endure more pain. So, this sell-off does feel different. Like, so the minor sell-offs we had in June, in July, it didn't really feel like this. But by the way, we're on the phone. We're on a call. Was it 2 days before the month end? I said, look, all this market might need is a calendar change. So you flip to a new calendar, and we might have selling. That's pretty much exactly what's happened. So, I mean, we haven't even had any bad news. I mean, this is 3 days of selling because it's September, not August now. So we still have the kind of the typical earnings pre-announcement season, which is probably, what is that? Is that 2 weeks away from now? We're kind of in the earnings lull right now. Finisar is usually one of the last 3 quarters. Then you usually have about a 2-3 week period. Earnings reports kick off first week of September, roughly, right? So, are there going to be no pre-announcements until next quarter? I don't think we're going to have nearly as many positive guides, pre-announcement guides, as we did the last 2 or 3 quarters. I don't know. I think we go lower, but we could be choppy. But I could have said the same thing from a 200-point lower base. Like, in fact, I did say the same thing from 78, 7900. I said, I think we'd go down 700 to 1,000 points. We only went down 300. So, maybe what we have to do, Jim, is go down more than 300 or more than 350 to kind of know. But I just still think, the market typically has a certain number of times it trades to and through the 150 EMA. We've only gone through the 150 EMA twice this year on the NASDAQ. That's super rare. I mean, even in 2013, which was a way more bullish and powerful bull move than this year, because a lot more stocks went up, and the stocks that did go up actually went up a lot more. And it wasn't just like 3 or 4 high market cap stocks that kind of carried the indices. I want to say there were like seven. I think there were seven corrections of 5 to 7% that year, and so I'm pretty sure you had 7 to 8 times that the Nasdaq went to 150 EMA, and maybe more. So again, 2 times. I mean, it's been a very strange year. So in fact, by the way, we will probably have a much better Q4 if we have sort of a scary sell-off before the end of the year. I think if we don't, it's kind of. I think there's a lot of people like me that just aren't doing a whole lot. I'm probably trading less now than I have in a long time, just because I'm just sitting, waiting. I'm waiting for my prices, or I'm waiting for certain things. I'm sniping. I'll snipe certain positions, but as far as having days where I'll trade 5, 6, 7, 8 positions, which I used to have, months on end, I would trade like that. I haven't, it's just been a weird market. I think there's a lot of professional money managers who are just sort of sitting on gains, have pared back, and they're sitting on gains, and they're sitting on cash, waiting for entries. So unless you give them those entries, which again probably are lower, not higher, I don't know. I don't know if we really have much fuel to have another big rally before the end of the year. But if we have a big enough, sharp enough sell-off, then I think we can actually end the year maybe spectacularly.
All right, well, let's close on that note then. I am out tomorrow, so you and I won't be able to chit-chat, but I suspect that you will make yourself available for us sometime early next week.
Absolutely.
All right, my man. Well, thank you so much as always. And like I said, we will touch base and we'll see how we are. And, well, maybe it seems as though every time we get off the phone after we talk about a NASDAQ sell-off, it goes up from here. So, hey, maybe that's the investors and traders cue that it's time to buy.
Here's one thing I will say. Okay, so Facebook, I'm not a buyer of Facebook, but I went short it at 161. And so, maybe a few of these names are down enough that we could have, some kind of a burst type move, or at least the end of the selling. I mean, this whole Facebook, Twitter, again, I'm not even a bull. I mean, I'm more bearish than bullish on Facebook. But I think if Facebook is down 20 points on Senate testimony in a downgrade, that's dumb. And then the fact that Twitter is down a greater percentage than Facebook is like quintuple dumb. So there are names that kind of almost feel like they're close to that they could bounce just because they've kind of sold off for spurious reasons, shall we say? And something like a Snap, same thing. I don't like Snap. I've said, hey, one of the greatest pair trades in the world when Snap IPO'd was short Snap, long Twitter. That was a massive home run. But Snap at 965 kind of feels like, it's kind of feeling like the selling's getting extreme. So there are pockets where it's sort of like, well, I'm not so sure why that's really gone down. Likewise, okay, why did Netflix go up? What was the low? 310, then went all the way up to 37. I mean, why did Netflix pop $65? I mean, again, things are just strange. Things are just strange right now. But in all the strangeness, there's tons of opportunity. I mean, if you've been just accumulating positions sort of on sniper mentality, there's been tons of times you can get really, really attractive prices on things, which that's kind of all I've been doing for like four or 5 months. I just kind of wait. It feels really boring. But then like the big Twitter sell-off a quarter or two ago when again, I thought they had good news. I think they sold off on like 10, 12 points on like a Facebook issue, which wasn't their issue. They went from 36 to 26. That was like an unbelievable time to buy Twitter, right? And I'll even close with this. Okay, so a stock that I loved in the low to mid-teens, Overstock.com, went absolutely crazy. Now again, I didn't milk this thing for all it was worth, but this thing's 25. Okay, this thing went to 90. Now, I would say, since I was super bullish at 15, I mean, I thought this thing deserved the move to 45 to 60. So, I mean, this thing's back 25. So, that doesn't mean it's going to stop going down at 25, but I would venture to say if I bought Overstock at 25, I'm going to make money on that trade. I don't know what I'm going to have to eat before then, but see, same thing. I'm not buying it yet. I'm just watching it. So if they want to give me Overstock at something really crazy again, I'll be a buyer. So I'm just sitting back and kind of waiting and being way more patient and tactical than than I normally am. But I mean, that's a good one to close on. I mean, now we could talk about Bitcoin. We could talk about, hey, is it going to go full bear market? I mean, it's had a huge decline. But there's a lot of reasons to like Overstock from a valuation perspective, especially here and lower. So we'll see what happens. But there is pockets of things that kind of are starting to kind of get what I would call almost hyper attractive again.
All right, well, that sounds good. Sounds like a great place to leave off. You gave our listeners a whole lot to digest, and the good news is that this time we definitely got this one recorded. I know some of you missed out on the one last week that we had. I did try to do a recap, but don't worry. Tech T and I.
Oh, did our last recording go bad or something?
Yeah, it didn't work out for us, unfortunately. We had a backup to the backup too, so it just didn't quite work out. Sometimes it happens. We have our technical issues. So
well, I mean, here's just one thing. I mean, I usually talk about what I've written about. So now it might not be what I wrote about the day before, but if you read like my last 2 to 3 weeks of notes, usually what I've talked about is what I've written about. So over the prior 2 to 3 weeks. So I mean, if you missed the conversation, if you just read my last note, you might not catch it. But if you read my last, again, roughly 2 weeks of notes, which is it's not like I'm writing 5 notes a day. It's like 1 to 2 to 3 notes a day. So I mean, if you go back and read the last 2 to 3 notes, I've probably written about what you and I just talked about to a large degree.
Yeah, and you always do a good job of recapping that stuff. So. All right, my friend, why don't we end there, and we will pick back up next week. You have a good weekend.
Enjoy the weekend yourself.
You too.